Hey there. Thank you so much for joining me. It's better late than never, but we have an important live stream today because we're talking about artificial intelligence stocks. I think it's widely accepted that the stock market move that we just had over the last, let's say, 2 months, especially since the Fed decided to forego an interest rate hike just a week ago, stocks have taken off. S&P 500's up a little over 14% year to date, which is a pretty decent return considering we're not quite finished with the first half of this year, not quite June 30th. But what to make of artificial intelligence stocks? Should you buy them? Should you sell them? Is it too late to get involved? And what does it really mean for you as an investor for the stock market? And maybe there's a better way, a better way to invest in artificial intelligence without feeling like you're chasing a speculative bubble. Okay, not to say that AI is a speculative bubble at this point, but lots of stocks are up an awful lot that have anything to do with artificial intelligence. And based on history, it is a fair statement to say that maybe it's a little too much, too quick, too soon, maybe a little bubblicious. That's what we're going to talk about today. Let me just roll the intro, and then we're going to just have a quick show. It's all about artificial intelligence investing, and I think this is like a really just. I know this is a huge topic. Here we go. Hey, thank you for joining me. Again, I'm Mitch Goldberg. We're just getting started. You're watching my live stream. It's called Be the Boss of Your Money. It is a really good show if you're into learning about personal finance, investing, how the stock market works, how the economy works, how it all works together. And more importantly, we talk about risk tolerance, your financial goals, and helping to uncover hidden opportunities, things that you could do to help make your money, potentially help make your money work hard for you because you're working hard for your money. That's what this show is all about. If you have any questions, please hit me up in the comments. I'll see them, I'll answer them. Hearing from you is the best part about doing the show. If you don't mind, if you like what you hear, give us a thumbs up, a heart, an applause, a wow, whatever reaction is available to you, depending on which social media platform you're watching on. If you're watching on YouTube, certainly give us a subscribe, a like. We'd always appreciate that. It all helps the algorithms. If you're watching on Facebook and LinkedIn, give us a thumbs up. It helps the algorithm. It helps let the algorithms know that you like what you see. It'll spread the show to more people, and more people get to learn from it. It's all about financial literacy, financial education, and helping you to become the best possible version of your financial self. We're talking artificial intelligence investing. Is it too late, too little, too late, too much? We could look at it a couple of ways. Let me go back to camera one. All right. So we have someone out there, just real quick. Jerry, my man. Good to see you. Thank you very much, buddy, for joining me. We got a couple more viewers coming in here. So artificial intelligence stocks, what do you make of it? NVIDIA, for example, I'm just going to NVIDIA hit a new year high today. Okay. So not bad. Way to go with NVIDIA. I'll show you that if I could pull that screen up. All right. Here. You see that? See if I can pop myself up in the corner. All right. NVIDIA hit a new 52-week high today at closed at $438, up $11. So the stock hit like 400, back down to like the 380s. Now it's up to 438. That's such an enormous move in just the last week since they reported numbers. And basically, people have underestimated severely how well NVIDIA stock is doing. Stock is up 199.77%. Let's just call it up 200%. Okay. Stock is up 200%. And it's an example of stock that's in the right place at the right time. And they've bided their time. If you recall, the stock was down about more than half last year. I wonder who all the people are who actually sold the stock into a down market, who panicked, bailed out, decided people decided that it was worth more as a tax loss than actually being the long-term holder that they said they would be in the first place. Let me explain something. This is I'm taking a playbook out of the year 2000, the 1990s internet stock boom, which turned into the bubble in 2000, also known as a tech wreck. So when the internet first came about, it really picked up around 1995, when Netscape went public. And it was companies that help other companies get online. It was all about semiconductor companies that make semiconductor chips, digital subscriber loop equipment, switching equipment, routers, software. Those were the stocks that did phenomenally well in the tech. Communications companies like Quest Communications. We had CLEX. Remember CLEX, competitive local exchange carriers. These are the companies that did really well, companies that help other companies get online and grow their internet business and become internet companies. And it was basically accepted that if you're a company and you didn't have an internet strategy, you were going to be toast. You were going to become obsolete. And by and large, that was true. But let's separate this. There are the internet companies, and then there are the rest of the companies. As big as the internet grew, and it skyrocketed from 1995, continues to grow now, but its heyday of early growth, let's say 1995 till 2010. And yet the tech stocks got crushed in 2000. They just got crushed. The NASDAQ went down 80%. I mean, think about that. An index going down, an index going down 80% is an insane amount of agony. And it took 15 years for it to recover. How many investors would stick with something for 15 years waiting for it to recover? And mind you, that had nothing to do with Google and Facebook. Google didn't go public until 2003. And I think Facebook went public, was it 2000, maybe 2015? 2012, I forget exactly, but it came way after the tech bubble, okay? NASDAQ bubble, whatever you want to call it. So the internet kept going up, but the stocks, as great as the internet was, the stocks still got ahead of the internet in terms of froth, investor enthusiasm, valuations, companies being judged on eyeballs, and without any path to profitability. And in the beginning, any company that put a .com after its name, the stock just took off because investors are so eager for the internet revolution to jump onto anything internet related. But the real money was not made in the quote unquote the internet stocks, the stocks we thought of as internet stocks. They got killed. Even Microsoft and Amazon got crushed. They took a very long time to recover. Apple was not even considered an internet stock, but that was just, nobody talked about Apple back then. Now you see what happened with Apple. They came out with the iPhone. So the internet kept going right along. What happened was this: it really impacted profitability, corporate efficiency of America, of corporate America. That's where the real gains came from. It was an advantage as a company if you had an internet strategy. Today, if everybody has the advantage of being an internet company, it's no longer an advantage. It's just table stakes. It's what everybody has to have. The same thing I see is happening with artificial intelligence. If there are companies that could put together a decent artificial intelligence strategy, they have a competitive advantage over their industry, over their peers. But I don't think it's going to be for long. Eventually, every company will have an artificial intelligence component strategy, just like every company today's an internet company. You buy a car, you shop online. You buy a toy for your kids, you shop online. Everything is online. Everything can be researched. All the advertising, all the cookies, all the following you, all the metrics. I think it's the same thing that happens with artificial intelligence. So right now, investors are getting worked up about the chip makers, the semiconductor chips, and the software that brings you artificial intelligence, that allows other companies to become an artificial intelligence company. And that has to happen first. First, we need the companies that could help other companies build the building blocks. And then these companies' sales go up because lots of companies, from the Honeywells of the world, Procter & Gamble, Disney, Boeing, you name it, every company, Ford, every company wants to jump into artificial intelligence to see how it's going to work. And they're throwing stuff against the wall, hoping something sticks until they finally come up with a strategy that works. And this is going to take a while, just like it took the internet a while. Although every company was using the internet, it took a long time for companies to really wring out all the efficiencies of the internet. Same thing now again with artificial intelligence. So if you really want, in my opinion, to ride the winners in artificial intelligence, you could take a shot and buy a lot of these stocks that have gone up already a lot this year. You could say there's still room to run. You could jump into the leaders, like, clearly the leader of the artificial intelligence revolution is NVIDIA. But here's the thing. I don't think this is the revolution that you think. Oh, it's going to be powerful and everybody's going to be on it like the internet revolution, but it's not going to be an overnight success. It's going to be more like an evolution. Artificial intelligence has been being used by companies for a long time, and it was used 6 months ago. It's used now, and it's gradually becoming more and more, in use, gradually going up, maybe rapidly going up. But the enthusiasm for stocks in artificial intelligence has gone up a lot more, way higher. And sometimes the stocks get ahead of the enthusiasm. And that's when I think investors start to get into trouble. And that's when we start to get into what many of us could consider bubble territory. Now, just so you know, you can't invest directly into an index, but you could invest into a security that tracks or mimics an index. But the real winners of the internet revolution / evolution, whatever you want to call it, and at the time, it was revolutionary. Today, you talk to people who, young people today, like my kids, and you talk about the internet, how amazing this thing was when it came out. They're like, they just don't get it. They were born after the internet became widely used. So I see that happening with artificial intelligence, and corporations are gradually moving toward it. They're doing it as fast as they can without a real clear strategy. So it's a lot of experimenting to see what works, what doesn't work. Eventually, consultants will come out of the woodwork to teach companies how to use artificial intelligence and what they should use it for. We're not quite there yet. But the real winners of the internet, and I think it's going to be the same thing for artificial intelligence, are just your standard fare, publicly traded companies that will become more efficient, respond to their customers faster, come up with new products and services faster that are to the liking of their customers. Those are going to be the winners. And eventually, having an artificial intelligence strategy is not going to be an advantage. It's just going to be what everybody has. It's like the minimal thing that you're going to have in order to keep growing your business and to even stay in business. So that's my take on artificial intelligence. If you really want to buy artificial intelligence, you want to reap the benefits of it, you could buy the stocks that get you on the artificial intelligence bandwagon, like semiconductor stocks and software stocks. There's a ton of them out there. Or you could just buy your standard fare S&P 500 index fund or your typical blue chip companies, because the typical blue chip companies are going to be the ones that eventually adapt to artificial intelligence. It'll become another part of their overall technology / internet package. And those companies will wring out efficiencies. They'll be able to do more with less, which unfortunately means firing people and having fewer employers. But the stocks could go up because they'll have more operating leverage, better earnings, supposedly. And I think that's really a good way to play artificial intelligence if you're not looking to chase the big run-up that we've already had in artificial intelligence stocks. That's how I'm playing that. I hope this makes sense. Reach out to me if you want more information, if you want to talk this through. And if you want help with your investments, with your financial plans, maybe your investments aren't really in tune anymore with your risk tolerance. You want to find that out. So you want to have a conversation with me. So you reach out to me. You could send me a DM. You could send me an email. Mitch Goldberg. You know where to find me. Okay. You're watching this. You know where to find me. And it's probably worth it for you. It's probably worth your while to have a 15-minute conversation with me to see if we're a good fit. And that's my story. I'm sticking with it. Thanks so much for watching. And I can't wait to talk to you tomorrow. Have a great day. Have a great night.